Hello, Accounting 1. Okay, we are in 8-2 in the textbook, and we are learning how to make a post-closing trial balance. And so the first thing, this is page 230 in the book. Page 230 in the book shows you right here, 8-2, work together. And this won't take long. First thing it asks, indicate which of the accounts will appear on the company's post-closing trial balance. Post-closing means after you closed out those temporary accounts. And if you remember, the temporary accounts were your drawing and the expenses, the revenue, and the income summary. So the only things that are going to show up on this, and closing means they have a zero balance. So the only ones that have a balance at this point, the only ones that can have a balance at this point are the ones in your ALO. If you remember ALO, assets, liabilities, owner's equity. Okay, so the only ones that are available that have a balance are going to be these up here: cash, petty cash, accounts receivable, supplies, prepaid insurance. Those are all your assets. Accounts payable, that's your liability, and your owner's equity is your capital. Those are the only accounts that have a balance at this time because we closed out all of these others to zero. All right, so now I'm going to grade step 1. And it likes it. I got green checks all the way through. Now, your trial balance is the same as a balance sheet. So think about it. Your balance sheet is also ALO, assets, liabilities, owner's equity. All right, so now we're going to go to the next step. The next step, it says here, post-closing trial balance. So we go down and it gives us the form, and it already tells us we're only doing cash, petty cash, accounts receivable, supplies, prepaid insurance, accounts payable, capital, and the totals. It tells us what you have to do. So we're going to go to cash. We're going to go to cash. And in the cash account, there's the balance is a debit for $4,900. Well, that tells us what we're going to do. Debit $4,900, just like that. Petty cash. Petty cash has a balance of $75 debit. $75 debit. So we're just doing that, what it tells us to do. Accounts receivable is also an asset. And this one has a balance of $1,387. $1,387 debit. So $1,387 debit. Supplies is an asset. So if you still have some supplies, they're going to be a debit. And at this point, it has $75 in debit to supplies. All right, I'll show you. Here's supplies and the debit balance of $75 worth of supplies. Here, 75. Prepaid insurance is also an asset. You own it and it has value. So we go up here to prepaid insurance. And we see that prepaid insurance now has a debit balance of $250. $250. So I'm going to pull that down here, $250. Okay, now we go to accounts payable. And if you remember with your DC Adler, accounts payable, those liabilities have a credit balance. A credit balance. So let's go up here. Here's the accounts payable, Southside Supplies. And we still owe them $267 in the credit. $267. And owner's equity is their capital account. And through the DC Adler, you know that that also has a credit balance. So we got to find the total for the capital account. And the capital account has a credit balance of 6420. Credit balance of 6420. 6420. Now, we have to total our columns to make sure that they equal. So add them up on your calculator. For debits, I got 6687 my first time through. So let me see if my credits, I add those together and they come up to 6687. I can't just assume that they both balance. I have to add both columns. They both balance. That's what you want because it says a balance. They're looking to make sure that it balances, they equal. Final step, grade it, come down through, and I have all green checks. And that's the end of that problem. All right, so then go on to the on your own, and I'll let you do that on your own. All right, that's all there is to 8-2 in the book. See you later.